Hey, how's it going? Today I'm going to be talking about intrinsic value and what that is. In finance and investing, intrin- intrinsic value refers to inherent or true worth of an asset, which everyone would need to understand when making decisions, purchase decisions, as well as when you're making decisions what you very least want to do with your time, money. You need to base those decisions on true value, such as stock, bond, when it comes to finances, as well as property or real estate investments. It is fundamental concept used by investors to determine whether an asset is overvalued, undervalued, or fairly valued in the markets. As you probably know, some of the prices up there can fluctuate depending on the many factors. Some of the things can be overpriced for a reason based on the region, based on the location, where in some places, continents, some of the things or prices do not make sense, or some of the regions they just give you a perspective of many reasons why things can cost what they costing right now. If we're taking a look at real estate or property, or if you're looking to densely located areas, supply and demand, perhaps there's a more demand for that particular asset, where perhaps outside the city, the same asset, the same house, let's say we're comparing to, right, it would be perhaps undervalued, or perhaps that would be more sound investment for many people based on their circumstances. We look at intrinsic value, and we look at earnings and cash flow. For stocks, and intrinsic value can be estimated by analyzing a company's earnings, uh, cash flow, uh, projected future earnings, discounted cash flow. DCF analysis is a commonly used method to estimate the intrinsic value of the stock, which involves discounting the expected future cash flow of the company's back to their present value. Just one of the ways to look at it. There's so many perhaps systems that any business owner, or perhaps investor, people who operating with surplus capital, be making their decisions what would be potentially good sound investment and how to determine dividends. For dividend paying stocks, the intrinsic value can be calculated based on the expected future dividends and the required rate of return on investment (ROI). The Gordon Grant model, also known as dividend discount model (DDM), is one way to calculate intrinsic value using dividends, assets, and liabilities. For assets like real estate or property, the intrinsic value can be determined by assessing property's physical condition, location, rental income, potential for appreciation, perhaps taking into account it's not limited to those factors that I've mentioned, as well as perhaps future projections, as well as currently commercial real estate or property undergoing a lot of challenging times for those of you up there who are following the markets, and as well as percentage wise, how much of currently US industry, but not necessarily limited to US. I believe I mentioned that already, but 40% of overall people are renters within US, as well as I have seen some of the articles coming from Australia, how expensive it is to rent properties within Australia. So commercial property is undergoing a lot of changes, right? So not that many businesses or banks who has the commercial real estate on their balance sheet undergoing a lot of pressure, right? Let's put two and two together, right? As well as more and more people are more interested in renting instead of perhaps owning homes, right? And so there's two markets out there who are struggling right now. So I believe that 40% perhaps need to mix with that people who are renters and people perhaps looking to set up companies and some commercial real estate. Perhaps there are some uh, challenges out there for people out there who are interested in different markets. Since we're on the topic of assets and liabilities, market comparisons. In some cases, investors may also use market comparisons to estimate intrinsic value. For example, they might compare the price to earnings ratio of the stock. Do you have average PA ratio of similar companies in the industry? For those of you who are interested, or if you perhaps would like to learn more about livestock enterprise, I would highly recommend to purchase this book. In the book, I'm sharing a lot of information for those of you who would like to learn more. I'm sharing how to begin and start. So I'm talking hopefully for those of you who perhaps looking to diversify. Uh, Either case, I'm looking to share knowledge with regards to perhaps reaching first milestone. That would be from zero to first 10,000 pounds, dollars, euros, and how to reach that. In the book, I'm sharing a lot of examples for those of you who like to learn more. In this book, I'm focusing on livestock enterprise, how to accomplish this particular business venture. You can find this book in the description below, as well as top retailers has it. Most likely, all the people do know that, but as well as do I need to constantly repeat myself? I'm not entirely sure. It's because most of the time, the people I'm talking to, some of them can be on top of their game and they can understand everything very quickly. Especially of those who have been up there, have seen some things, right? How to structure, how to base their decisions on. For those of you perhaps who trying to or just starting out, right? Perhaps I need to remind of how potentially others did it and what kind of formulas other people out there did it, how they, if you perhaps that's the best way to approach the subject, right? There is an example of Maslow hierarchy of needs, and within this example, as well as I'm looking to release a training course on this particular area and how to understand it. What would be in the gist of it, of this concept, is what you can go without and for how long would you be able to survive with some of those needs. Other people within this field, they've done a lot of work doing research of how to understand the subject and how to base your decisions and how to understand it, right? And I would say from your immediate day-to-day surroundings, talking about perhaps some of those things would be physiological needs, and perhaps is some of those areas that you should begin with. Progress to safety needs, as well as love and belonging, esteem, and finishing with self-actualization. All right, so that's perhaps how you can structure those needs. And for people up there who are making their decisions, what kind of venture they want to enter, you need to understand how economy works and where the money changes hands and where you can find yourself in the near future, hopefully. It's important to note that intrinsic value is theoretical concept, and different investors may arrive at different estimates based on their assumptions and methods. How you are making your decisions, right? Perhaps worth taking a note and taking a look as well as decisions made, as well as the process, how you're doing that. Market price often deviate from intrinsic value due to various factors, including market sentiment, speculation, and short-term fluctuations. Investors use intrinsic value as guide to make informed decisions, aiming to buy assets that they are that are undervalued and sell when they are overvalued. Supply and demand, right? I would like to finish on that. Hopefully, I cover this subject. It might be worth revisiting just to make sure that I'll drive this point to everyone how to make those decisions of that. Thanks for watching. I'll see you in the next one.